Good afternoon, everyone. Anthony Alaka with Torrey Hills Capital, and welcome to the Integra Resources webcast for May 10th, 2023. Hope everyone's doing well, and thanks for taking the time to join our virtual lunch. Integra Resources is a well-funded precious metals exploration and development company focused on the U.S. With the recently completed merger with Millennial Precious Metals, Integra has become one of the largest precious metals development and exploration companies in the Great Basin. The company will be filing a mine plan of operations for DeLamar, its most advanced project, later this year, and other important milestones are expected for the company's Wildcat and Mountainview projects in 2023 as well. Company trades on the NYSE American under the ticker ITRG. Company is trading with a market cap of only about 90 million US, and based on the company's current fundamentals and positive outlook for precious metals, we feel there's plenty of potential upside as the company continues to execute its strategy. With us today to discuss Integra Resources operations and growth strategy going forward is newly appointed President and CEO Jason Kosec and the company's Executive Vice President of Investor Relations, Josh Serfass. It's great to have you both on today, and thanks for taking the time to bring our viewers up to speed on Integra Resources. Obviously, with the Millennial Precious Metals merger complete, it's a very exciting time for shareholders, and I'm happy to have you on with us today to discuss the company's future. But before I turn it over to Jason, I just want to say if anyone has any questions during the presentation, just simply type it into the Q&A or chat box, and we'll make sure it gets answered. So with that said, I'm going to turn it over to Jason. Jason, the floor is yours.
Thanks a lot, Anthony, and thanks for everyone for joining. I think most people on the call are quite familiar with myself and the Millennial assets. So today's focus is going to be kind of give you an introduction on Integra, give an introduction on Josh, and kind of where we see the value creation over the next kind of 12 to 24 months. So with that, I'll hand it over to Josh to give an introduction on Integra, as they have an amazing track record through mine discovery, development, and right through the whole cycle.
Perfect. Yeah, thanks, Jason, and thanks to everyone for joining. I think Anthony said it's Philadelphia and Atlanta. I am actually a Philly-born person. I was born in Abington Hospital, just outside of the city, but I didn't really spend much time there. But all the family is in the greater Philadelphia area, so it's nice to talk to some fellow Eagle fans. But yeah, as Jason mentioned, I've been with Integra for about 10 years. This is sort of the third variation of Integra. We kind of nicknamed it Integra 3.0, but way back when, Integra 1.0 was a project in northern Quebec, just outside the town of Val-d'Or, which is a very famous mining camp in Quebec. We, as a company, had identified this former mine that had operated for about 100 years that had just shut down. We believe that there was more gold to be discovered there, and so decided to acquire this asset. Started drilling it, made a very big discovery under a swamp that just had never been drilled before, which was kind of amazing. And then bought a mill out of bankruptcy from Deutsche Bank across the street. And in 2016, we actually started building the mine. We were about 300 feet below surface. It was an underground high-grade gold mine. And in 2017, as we started to really pursue project finance to get the thing up and fully operational, Eldorado Gold, who is a mid-tier gold producer that operates around the world, came in and acquired us for about $600 million. As when these things happen, typically management gets the boot out the door and Eldorado takes over. But they did a fantastic job. They got the mine up and running in about 20 months. It now produces about 200,000 ounces per year. And it's become really one of the jewels in their crown in terms of production in a safe jurisdiction. And they just made another big discovery. So that mine's going to continue to operate for decades from now, which is great. So the Integra management team, looking for a new project, kind of started looking around North America. We wanted something very similar to what we had in Quebec, which was something that was a past producer that was shut down with gold and silver still in the ground, but really because of price, where they weren't making margin. And so we started looking, and we quickly kind of honed in on a project in southwestern Idaho. It's part of the Great Basin, which is this very famous mining jurisdiction in the U.S. It's where the Millennial assets are in Nevada. And so we acquired it from Kinross Gold, which is a major producer based out of Canada. They had operated it for 20 years, from the 1970s to the 1990s, to the late 1990s. And then at $300 gold, $5 silver, they just weren't making the margin, so they shut it down. We came in, obviously, gold was at $1,600, so your margins are much better now than they were at $300 gold. We came in, we put together a quick resource and then an economic study, and then lastly, a pre-feasibility study. But DeLamar is about 5 million ounces of gold equivalent. There's a large silver endowment here, so gold and silver. And we're now really propelling the path of permitting with the anticipation that in 2026, we'll have our permits to bring this into operation. And so where things got interesting this past year is we started talking with Jason and the other Jason at Millennial about, there's a lot, and I won't steal Jason's thunder on this because he does a very good job at presenting it and talking about it. But, there's a lot of small single asset companies in the US, and, we're all sort of competing for the same capital. And so we kept hearing from our investors, we kept hearing from, the street that we should look at bolting some of these together. And so since DeLamar was going into this permitting phase where, we'll take you through it, but, as you go into permitting, people typically lose interest in the story because some of that fun exploration is gone. Whereas Jason has these great assets, which are on the permitting path, but have lots of exploration potential. So we started talking and we thought it'd really make a lot of sense to bring the two companies together. As we de-risk DeLamar, go through permitting, we can really expand the projects that they have in Nevada, or now I guess we have in Nevada, and really present a company that is unique in terms of we're now the largest resource endowment not owned by a major in Nevada and Idaho. We have a clear path to permitting. We have a treasury to expand. And, this is a company that's right now has got, call it 6 million ounces total of gold, silver equivalent, and a real clear pathway to 7, and then a pathway to production in a few years of 200 to 250,000 ounces in the Great Basin, making us, our vision is to be the next mid-tier gold producer in the space. So with that, I kind of took a lot of Jason's thunder, so I'll let him jump in and sort of take you through a bit more of the merger, what's next, some key catalysts for us, and really why this is a unique American gold and silver story.
Yeah, thanks, Josh. That's a really good summary, guys. Just to add to that, what we really were doing here is securing assets and securing people so that when this gold and silver market really fully turns, we are primed for success, and creating that go-to vehicle that if you want to own gold and silver in the best mining jurisdictions in the world, that has the scalability to be a real mid-tier producer, has the resource endowment that we have. Really, there's nothing like it in the space. The other thing some of you might have heard when we were talking before we opened, Integra, we do have a NYSE listing, and that's huge. And why is that huge? Is because if retail brokers want to recommend this to their clients, a lot of developers and explorers are not Blue Sky compliant. So with that NYSE listing, we are Blue Sky compliant, so retail brokers can recommend it to the client. And in the gold exploration and development space, there's only a handful of companies that are fully Blue Sky compliant. So not only does the resource endowment, the people, the NYSE listing set us apart, but also it's a really catalyst-rich story that's completely undervalued from its peer group. And as Josh mentioned, this is not our first time doing it. The millennial story and our background, we've done this 7 times. And the real value creation is the trains leaving the station, so to speak, is where we create value. Is we get into projects at, right now at a 0.15 on a PNAP basis. The average acquisition costs for open pit heap leach ounces that are permitted are 0.9. So there's a serious value creation curve that we're going to go through right now. And it's a really compelling story, and especially with gold going well over 2,000. With that, I'll kick it off. Just a cautionary note, I will be making forward-looking statements, so the full disclaimer is on the company's website. I encourage you all to take a look at that. We've already really touched on this. One of the things, though, that we've done is we've brought in Wheaton Precious Metals, which is one of the largest gold and silver royalty and streaming companies in the world. And what that is it was a very competitive bid process. These people are very technical. A lot of people rip through the data room, and really what it gives us as a team into the market is significant project validation on a technical level, and removes a lot of the project financing risk going forward, because they will be our partners. Also, BD Capital, which is a big fund here that does project financing as well. They are a big supporter. They're in there for a significant chunk. So, from a strategic perspective, you got kind of the, tier one names that are involved, and on a technical level, validated the project. As a geologist, I always look for kind of people to validate things. From a management team perspective, Andre St. Germain was with Integra 1.0 and has moved through us. She's a staple in the Canadian mining industry. Tim Arnold has built multiple mines in the Great Basin. Again, a staple from the engineering perspective within the Great Basin and throughout the United States. Obviously, a mining engineer. George Slamis was the former president and CEO of Integra. He is now the executive chairman. And most of you know myself. From the board perspective, Steve DeJong was the president and CEO of Integra 1.0. Butch Otter was the governor of Idaho. Eric Tremblay has joined as well. He was the GM at Canadian Malartic, which is now the largest gold mine in Canada. So from a technical perspective and a capital markets perspective, really check all those boxes from a team that has a really successful track record on all aspects of the industry. From a share structure perspective, market cap right now, US 90 million, shares at 184 million. Should be noted that we will be doing a share consolidation to remain compliant with our NYSE listing. It'll be a 2.5 to 1. That'll be completed May 22nd. Really, the other thing that gives us that significant validation is not only does management own 10%, and we've been buying significant chunks over the last week because we're no longer in blackout, but you have the biggest institutional long-only gold funds that are in the space. And commonly, you will not see a share roster like this for companies that are sub $500 million market cap. An analyst perspective, very well covered across the street. If anyone wants the research that they don't already have, we're more than willing to send it out to people. Cormark just issued a new release with a buy rating of 2 or 250. Josh, I can't remember.
Yeah, that's right. 2.
Yeah, it's significant coverage across the space. From an assets perspective, the one thing is as much as we're in the business of adding ounces in a systematic and scientific manner, we're also in the business of risk mitigation. And one of the things that commonly plagues development stories is having a single asset, and it backs you into a corner. So if there's a delay, and I'm going to be frank with everyone here on this call, there usually is a delay at some point. That's just the reality. And how do we mitigate that risk is what a management team, frankly, should be getting paid for. So what we do is we have 3 horses in that race to getting to a permit. So if there's a hiccup on one, just from a timing perspective, there's no risk of getting the permit. But from a timing perspective, we can adjust which one goes first. Not only that, there's significant value in all of our exploration assets. Okay, these exploration assets were in the hands of a junior company. You'd have a market cap of around 50 million at least, and the market is really only giving 0.15 on a NAV basis to the 3 projects at our resource in development stage. So there's things like Red Canyon that sit on the Battle Mountain Eureka Trend, 35 kilometers south of one of the largest gold mines in the United States, sits in the same rocks and has some of the best drill intercepts, drilled globally in 2021. So there's a lot of value that right now is not getting ascribed to the company in the exploration assets. And that's really your optionality in the portfolio that gives you that added torque going down the road for potential world-class discovery. This is what Josh was mentioning. This is the famous Lassonde curve. So the life cycle of kind of exploration through development through to production. And what happens, another thing that we get paid to solve problems. When you're in this cycle, people lose traction because it's a permitting story, okay? And basically, we'll be submitting the mine plan of operations, which is the first kind of really catalyst to drive that permitting process. And DeLamar is going into that literally at the end of this year. So how do we, by de-risking this and getting closer to a production scenario, how do we attract new investors and get some exploration excitement? And that's why these two companies together really do that, because Wildcat Mountainview are just going to start kicking off this value creation curve once we get our exploration plan of operations sometime in Q3, Q4. Just so people know, in Nevada and throughout the United States, there's really two types of exploration permits. There's your notice and then your plan of operations. So to put it in perspective, Wildcat and Mountain View have only been drilled on a 5-acre permit. So of the 24,000 acres, you've only been able to look at 10 acres. We know that we can significantly grow that. That permit will be coming in, and that's what will really start this value creation curve, okay? Now, once we get once we roll over, this is 2-3 years of value creation. Once we get back onto this side of the slope, DeLamar will be going into production. So that's how we create value throughout the entire life cycle. And we have the ability to do that because we're a multi-asset company and not a single asset company. And that's one of the major things that this transaction and this company offers that sets us away from our peer group. I've touched on a lot of this. One thing, people, like I said earlier, as much as we're in the business of adding ounces, we're also in the business of risk mitigation, okay? That is one thing that is for certain. And one thing too is that the Integra team had an amazing engineering, permitting, ESG and local kind of stakeholder engagements that really round out the whole company as a whole. So DeLamar, as mentioned, it has a PFS on it right now. We will do an updated resource this year and another PFS that will just include the oxide portion along with the stockpiles that we'll touch on later. Wildcat and Mountain View will have their maiden PEA, which will really show how robust the economics on it. From a permitting perspective, DeLamar goes in at the end of this year, their mine plan, with Wildcat going in at the end of 2024. And that's really where you start growing from, 0.15 NAV to 0.5 when the mine plan goes in. When you're ready to get a record of decision, now you're at that 0.9. From a community perspective, our team here has done an amazing job working with all the local government agencies, both in Idaho and in Washington, and our local communities in Jordan Valley. The team has done a fantastic job working with them. The other thing, from a resource perspective, there's significant growth here, okay, that is not getting baked into the evaluation. And that's really what will drive the story is as well, to show that scalability and show that scarcity factor. In the Great Basin, the most recent transactions to show you kind of what we're sitting at, at a feasibility study level in a mine plan, Gold Standard was purchased for $240 million. That was 1.3 million ounces of oxide. As Josh mentioned, oxides will be at 3.5, including the sulfides will be pushing over 7 million ounces. So you can see the value that these ounces ascribe to. Again, same with Centerra, that was at 0.5. Corvus at a PEA level, 370, and Crown and Sterling for 150. As I mentioned, though, Integra is the largest resource endowment within this Great Basin. Okay. So these were all kind of 500,000 to 1.5 million oxide projects. We're going to be pushing over 3.5. So you can see the scalability in honestly the scarcity factor. The average acquisition cost, which is easy to kind of compare apples to apples for the on an EV ounce basis, was $100 an ounce. We currently trade at $18 an ounce. So again, significant value creation over the next few years here. The DeLamar project, right now, like I said, 2.6 million ounces of gold, 127 million ounces of silver, making it one of the largest endowments in Idaho. Really robust grade, amazing strip ratio, significant kind of production profile of 136,000 ounces per annum, and an AISC of 814. That is your all-in cost. So I like to say that the mining industry is quite simple. It's like any other industry in the world, okay, that it just comes down to margin. So we take ounces out of the ground for 840, and in today's market, we sell them for $2,040. Significant margin. Apple doesn't make that type of margin, okay? The thing that is not getting accounted for is the oxide, the stockpiles that Kinross left us behind, okay? And what it is about 50 to 60 million tons. It didn't make their cutoff grade, so they just stockpiled it. It's already been blasted. It's already been mined. That's going to add about 700 to 1 million ounces on this number, okay? So significant accretion for shareholders that's not getting baked into it right now. Another thing that we've done a great job at is our discovery cost is $10 an ounce. Commonly, just so we've done this a lot. Commonly, your cost per discovery ounce is in the $30 to $50 an ounce range. Okay, so we've done a great job creating value right from the beginning and right from the drill bit. This is the oxide only portion of the PFS. 8-year mine life, AISC of $814. 136,000 ounces of gold equivalent production per annum, a U.S. NPV at a 5% discount rate of 314, and a 30% IR, 2-year payback. And as I mentioned, that 50 to 60 million tons is going to add, almost 4 years of mining, and probably add about 150 to 200 million of NAV onto that. Okay. So again, things that aren't getting baked into the valuation right now as we speak.
Hey, Jason, do you think you can get past 11 years? Is there more? Is there an opportunity for greater expansion in that area?
Yeah, totally. So there's a lot of exploration upside that sits outside the main pit. But DeLamar is a permitting story. So for us to start drilling year 11 in past that doesn't add any value to us right now.
Right.
Where we can really expand the production profile north of 200,000 and expand out the mine life is bringing on Wildcat and then bringing on Mountainview. And then all the growth here at DeLamar. So this is there's easily looking down the road, you could push 15 years, no problem.
Yeah, that's great. And then in terms of financing the project, have you discussed that yet, or is it still a little too early for that?
Yeah, it's a little too early for that. Again, we have the partners in there now to remove that project financing risk. BD, basically financed Ascot, financed Atlantic Gold, and has done a few other ones. And same with Wheaton Precious Metals, because there's a significant silver kick on this thing. So doing project financing through equity, streams, royalties, a little bit of debt, and depending on what the cost of capital is and where we sit, to say it's X from royalty streams and Y from equity and Z from debt. It's too early to tell, but over the next kind of year and a half, and by the end of 2025, we'll make that decision.
Great. And then the CapEx is going to be what, about 280 to 300 roughly, or?
Yeah, it's about 275.
275. Okay.
Yeah.
And this study was priced out at like peak inflation. Like, it was nice to see those inflation numbers today starting to slow. So for us, if you're in the camp that inflation is going to start decreasing, then that number we would expect to come down, because we were seeing 65% increases in costs versus the study we did in 2019. So, these are real numbers. This isn't a study from a long time ago. These are numbers that have been, inflation is very baked in.
Yeah.
Yeah. This is, those numbers too. And remember, it was, just after COVID. So your cost, the fuel, your cost for cyanide was up. Cyanide was huge. Ammo for the explosives was up huge. Because of supply chain issues, and that number was baked into that CapEx number. So I think we could probably get it down. It matters how we optimize it.
Yep. Great. Thank you.
And the other thing too is that we're not reinventing the wheel here. This is how Alamos Gold was built. Most recently, Orla has done an amazing job. When they did their merger and did their PEA, they were $125 million market cap, kind of Canadian where we sit right now. They're $1.4 billion right now. Okay. So we're not kind of reinventing the wheel. We've seen very good teams do it in the past. And this is really the next one that's going to come online to kind of go through that process.
Yeah, absolutely.
I've talked about the stockpiles. So basically they mine it. It doesn't make their cutoff. They put it in a pile. We're basically going to take that material and throw it on our pad. We would have had to remove a lot of it, and that got baked into the CapEx too. And now that it's actually ore and we're going to make money from it, not only do we clean up the site, lower the pre-production CapEx from a stripping perspective, but also generating significant cash flow from it. And, just to put it in perspective, some of these holes, 74 meters of 0.74, 111 of 0.6, just so everyone knows, the average oxide grade, okay, not including the strip, is around 0.35 in the Great Basin for oxides. Okay. So just that puts it in perspective. Okay. What a gift Kinross left us behind. For the essence of time today, so we can open up the floor for questions. I'm not really going to go into Wildcat and Mountain View. I think everyone is very well comfortable. If we want to, we can. But what we're going to be doing here at Wildcat is starting our really kicking off that kind of exploration growth story starting in Q4. We will also have an updated resource in the maiden PEA, hopefully by the end of June, early July. Again, forward-looking statements, but we're seeing that number come around 250, 300 million of US NAV. So on a combined basis, this company offers about 700 to 800 million of US NAV. Okay. And as I mentioned, these ounces, once they're permitted, go for 0.9. Once the mine plan is in there, they go for about 0.5, 0.6. So you see the significant decoupling from a NAV basis to our share price.
So for Wildcat, you put in the expanded plan of operation a few months back. Where are you with that right now?
Honestly, Anthony, it is with the BLM.
Okay.
We're subject to them, but I can tell you that we are the next permit to be signed off on.
Okay.
So I don't like giving timelines when it's not in our control, but it'll be sometime in the beginning of Q4. That being said, there's still a little bit of disturbance. We also have 30 pads already built from last year. So we can start it and then significantly grow it over the 2023-2024 season.
Is that the same for Mountain View as well?
Yeah, same thing for Mountain View.
Okay, great.
Yeah. You can see here, we're just looking at this little blob, okay? all of this material sits outside of the current resource. We've expanded it from 1.5 by 1.5 to 3.5 by 2.5. Okay. Just within this near surface area, not even talking other targets. We all know it's super easy. You're taking the top off the mountain, real nice and easy. There's zero strip. And what people need to understand is that, grade is grade, but margin is king. Okay. Mm-hmm. So some of the things you got to look at is the grade to strip ratio, which I'll show you later on in the presentation. And our assets are the highest grade to strip ratio. Strip adjusted grade in the Great Basin. And every time we've tried to, drill a hole for a pit wall, we're hitting, significant intercepts, 150 meters outside the pit. Okay. So again, significant growth here. And we were just really confined to a little sandbox, and now we get a whole beach to play with.
Right. So these will be part of the expanded plan of
So
operation.
For example, for us to get to run the pit from there to there, we need to put one hole there.
Right.
Because the maximum distance you can let the resource search go is 100 for inferred. So we have holes like that everywhere, in surface samples like that everywhere. Just from a disturbance perspective, we couldn't put that hole there.
Okay. So you think you'll probably expand the drilling based on the EPO? Obviously, once you get that permitting, is the deal to just go right into the drilling, after you get approval?
Oh, 100%. Yeah. Remember, like we come from companies that, when I was a technical guy, we have run programs that are 1,000,000-meter drill programs. I'm not going to say this is going to be 1,000,000 meters, but you can do it for a lot less because it's at surface. Yeah. But, I like to say, once you understand the geology, it turns into the SUDS program, which stands for shut up and drill stupid. Okay.
Yeah.
So it's once you get the controls of mineralization, you can let the rig fly and really, really grow the resource. But you need to understand the geology first. You need to understand the engineering first. You need to understand the metallurgical work first, because those can be showstoppers. And before you allocate capital, you need to get those under control. And that's what we were doing in the last kind of 2 years here.
Yeah.
Mountain View, it's very same thing, so I don't need to repeat it. It'll be a joint PEA between Wildcat Mountainview, because they will share infrastructure and management teams. So, the resource, like I said, is going to be between 1.3 and 1.5 million ounces. So, and most of that, about 80% of that, we're hoping is going to be into the indicated category. So again, just further de-risking from a resource perspective. Again, significant growth here. Our last hole was 100 meters outside the pit. We drilled 36 meters of 4 grams. The entire hole was 185 of 1.5, call it. We tried to drill this basically main ore body, and the last hole got into it 17 meters of 0.6. We're just getting into the zone, and the rod snapped. So again, we're going to continue to step out and do the exact same thing in Mountain View, okay? This is one of the interesting things, okay, is that right now we are the largest resource endowment, okay? By the end of this year, we'll be closer, just over the 7 million ounce mark, really separating us from our peer group, okay? Now, when I'm talking about strip adjusted grade, so basically, how much waste rock you have to remove to get to your ore. Okay, that's kind of what you have to think about it as. And when you do that, the Nevada assets sit at 0.56, the Idaho assets sit at 0.28, and you can see these are producing mines. Okay, at 0.13, 0.19, 0.1, 0.17. This is a good one at 0.35. So you can see, these are real projects. And then obviously we factor in the recoveries. So what the gold recovery is, and we're going to be, again, the Nevada assets will be in the mid 70s as well. So these are very economical ounces and high margin ounces that really separate us from our peer group. Okay. From a market cap perspective, companies, we're talking putting us right here from 2026 to 2028, producing over 230,000 ounces. Those companies, are in the, billion to $1.5 billion range. Okay. Again, not reinventing the wheel, just looking at what amazing teams have done before, and just being that next story. So we're very well positioned for a significant growth perspective.
Hey, on that list, Jason, if you can go back, obviously Integra is at the bottom in terms of market cap, but where do you see yourself right now in terms of an apples to apples comparison of those above you?
So, okay, with the Nevada asset PEA, on a combined production profile, we're going to be sitting right here on a production basis. Mm-hmm. Where does that get us on a market cap basis? I would imagine, because they're not fully into production, you're going to be sitting somewhere in this range. So, an easy kind of 4 to 6x from here.
Yeah.
And then once you're in production, now you're up in this neck of the woods.
Mm-hmm.
Right?
Absolutely. Thanks.
And I think we believe in, very systematic from an exploration perspective, from an engineering perspective, but a very aggressive approach, because time kills companies. Okay. So what we've done, from growing these resources, from de-risking them, and what we're still going to be doing has been very aggressive. And I beg to differ. There's another management team that is really done as much work as we've done on a combined basis, and still a lot of excitement to come. As I mentioned, it'll be an updated resource, including the stockpiles. So that resource at DeLamar will grow significantly. Big value driver from the mine plan of operations. That kicks things to a 0.5 on a NAV basis. Wildcat Mountainview, you get the updated resource in the PEA, which gives you that added NAV exposure. And then we're going to start the big drill program and really driving that exploration story. All the while, you still need to continue your permitting. You still need to do your engineering and in your kind of ESG work with the local communities. And that's one thing also that sets us apart, is that, we're driving this thing to the permit and working with all of our communities, so that all stakeholders benefit from this. And a lot of other companies, don't do that, and not because they don't want to. It's two things: it's access to capital and in a team. One of the biggest things, like I mentioned at the beginning of the presentation, this transaction was about securing assets, but most importantly about securing people that can get this job done. That is one of the biggest things that, some of the most famous mining people in the world, like Tony McCooch, really seem to think that are going to plague our sector. And we're really fortunate to have a full in-house team to kind of push everything right through into production, as Integra has done before, as we've done before at Millennium. And really, like I said, in a nutshell, you got size and scalability. You got near-term production. You're in the best mining jurisdiction in the world. You've got a team that's done it. You got a treasury with around 35 million in the bank, and some of the best shareholders that really give it that project validation on a technical perspective. With that, I think it was a little bit longer than normal, but
that's okay.
A lot to talk about and a lot of projects. And we won't even go on to the 7 other exploration projects.
Yeah, I know. There's just there's so many projects right now that I think obviously the focus needs to be on DeLamar right now, as well as Wildcat Mountainview. And it's obviously clear that the company's on track to become a leading mid-tier gold and silver producer in the U.S. So it's a very exciting time for the company. We already have some questions in queue at this time. I want to open it up for questions. If anyone has any questions, type them into the Q&A or chat box, and we'll make sure it gets answered. First question, always a good one, actually. What are a couple things that you worry about the most?
I can start if you want on that one.
Yeah, go ahead.
I mean, I think, and I might steal one of Jay's, but for us, this is the capital intensive industry, and the gold price is hanging in there really well. But obviously, we're very open about the fact that until we're in production, we have to raise money, and so you just want to, a rising tide raises all ships, and if the gold price continues, I think this is a great time for us to be doing this, and hopefully we get into production as we're really ripping on gold prices. So, I always think the greater market, the thing we can't really control, is always something to be concerned about. But fortunately, given our project, given our background, we've always been able to access the capital markets and continue to, as Jason said, aggressively advance these projects, because, sitting on these things is what really kills companies.
Yeah, exactly. And, I think, permitting perspective, we minimize that with having both Idaho and Nevada, the best kind of mining jurisdictions in the world. But those are things that, when you go into that pipeline, the time is out of our hand. We will always get it. But it's just a time perspective. And that's why the things that worry me, we are very proactive of finding ways to lower our stress level. Okay. Yeah. And by doing that, you have multiple horses and access to capital. That's why we have the largest funds in the space. That's why we bring in Wheaton. That's why we bring in Beatty. They know how much it's going to take to get to the finish line, and they're going to be very supportive the whole way through. Yeah.
Speaking of Wheaton and Beatty, especially Wheaton, can you talk a little bit about what their role is? I mean, are they just a passive investor? What kind of role do they play going forward? Are they potentially an acquirer since they own so much stock? I mean, I don't know if that would really be in their wheelhouse, but what is their involvement with the company?
Yeah, I'll let Josh take that one.
Okay. Yeah. So, as we went through this merger and we did the concurrent financing, we were looking for new capital, and one of the the ways to do that is royalties and streams and things like that. And so we were running a competitive process with a few of the big royalty and streaming companies, and Wheaton approached and offered us essentially the up to 9.9% stake, which they can maintain. And all they wanted in exchange was a right of first refusal. So down the road, as we get towards project financing and we're looking at bringing in a royalty or a stream, Wheaton has the right to bid on it first, essentially. Like, we can run a process, we can get bids, but at the end of the day, if Wheaton wants to match it, they can match it. And so for us, it's Wheaton is an incredibly technical group. So it's, again, a stamp of approval on the project, but it's also really money that it doesn't come with anything other than their ability to say, yes, we will match this offer. No, we don't want to match this offer. And so, yeah, they've been incredible to work with. Super simple investor rights agreement, super simple term sheet. And for them, because the royalty space is so competitive, for them, it's just a way to get a little toehold in. They can do the work ahead of anyone else and things like that. So it's been a great relationship so far, and we'll continue to be there as we move forward and build this thing.
Yeah. And just to add on that, we got other offers. Anthony, we could have done a royalty at 1x NAV. Okay. Wow. We're trading at 0.15. Okay.
Right.
That's what people were going to give us money at. That being said, they wanted that 1% on what goes into the mine plan. And we very well, why they're doing it, because they know exactly how much bigger it's going to get. Right. And then they're not going to pay for any of the upside. So to keep optionality open, going down the road as we add ounces, just having the ROFR gives us that flexibility. But there was other money there at 1x NAV. Okay. Wow. So that is a huge stamp for project validation.
Yeah, I mean, there's some money that Wheaton gave you. is that earmarked for something specific, or will they just kind of let you do what you need to do? with
It is basically, we talk to them all the time, and we run them through what we're doing. But they're a passive investor, and we can kind of allocate it how we so speak.
Great. Given the tightening credit environment, what are your cash needs over the next 12 to 18 months?
So we're good until, sometime in Q1. After sometime in Q1, we will need to raise capital. Okay. Whether we do it through a royalty or stream, or whether we do it by issuing equity, we'll see what it looks like. But as I mentioned, the team has done a very good job putting the key people to really support this the whole way through. That's one of the things. Like, the reality is that until we have cash flow sometime in 2026, 2027, we will require financings. That's the business.
Yeah, that's the nature of the business, of course. Could it be another strategic investment by another company potentially?
Yeah,
Absolutely.
Absolutely. Well, we will look at anything to create value and unlock value, even through our exploration assets. As a large shareholder, everyone knows, I'm continuing the market all day, all that until once we close all this week. George has been there. The whole management team has been in there buying stock. You'll see us all file in the next couple of days here. So anything that can be accretive, we will be looking at that for sure.
Yeah, Jason, and you were already a major shareholder of Millennial. You've definitely put your money where your mouth is from the beginning. So it's great to see that you're in there buying. Now that you're in Integra. What do you think the average cost of shares for the large institutional holders is?
Right now, Josh,
Tough question.
Yeah, I would say probably like on an Integra basis, probably around $1, Josh.
Yeah, I think that's probably right. Maybe a little bit over.
Canadian?
Canadian.
Yeah, Canadian. Yes.
Sorry.
Great. And then obviously being in Idaho, being so closely connected, to Nevada, and being in the States, infrastructure around DeLamar is obviously, they have everything: roads, electricity, water, no need to build anything, correct?
Yeah, when we acquired it, it came with all those things. We have to build the heap leach pad. But yeah, we have workshops, 69 kilowatt power to site, water treatment facility, all that. So yeah, they shut it down in the early 2000s. So it's in the mind of many Idahoans, it's still a mine.
Yeah.
It's not a reclaimed mine site, which is what it is.
Can you talk about the benefits of a heap leach project in terms of cost and things like that, that our viewers might not be aware of?
Yeah, so something that will do around the 200,000 ounce range. If they were sulfides and you had a real CIP or CIL plant, the capex for those, like for an open pit perspective, are like the $500 to $700 million range. Okay, so
Yeah.
the most recent PEA would be Nighthawk.
Mm-hmm.
They were around that same production range, and their pre-production capex was $650 million. Okay.
Yeah.
So the capex is half, and that's why these are real company builders. Like, this is how Orla started. This is how Alamo started. There's a number of other ones that escape my memory right now. And why is because the pre-production capex isn't that extensive. The other thing too is people got to remember, there's a lot of good projects out there, but in with size, but you're a $150 million company and you have 600 to $1 billion of capex sitting on your head.
Right.
It'll be very hard to finance that. But when you're 150, 200 and your capex is 250, you can finance that.
Yeah, for sure.
As one of our engineers told me, heap leaching is just the efficient movement of rock. because all you're doing is just moving rock to the pad. And so it's low margin, it's simple. You don't have a big mill that's complicated and requires a lot of people to work in it.
Yeah, absolutely. And you have so many other properties that are just at the very, very, very early exploration stage. Obviously, Red Canyon, Ocelot, part of the Millennial package. Would you ever consider divesting some of those properties, or is the goal to just kind of keep everything right now under the Integra umbrella?
Yeah, I don't want to go down a rabbit hole here, but we will look at doing something that can unlock value through those. Spinning them out into another company, no.
Mm-hmm.
But we will look at something maybe with a bigger brother to unlock value, because they're only about 10% of our budget goes to them.
Yeah.
It's real simple work. The guys are down at Sierra Colorado right now mapping and sampling, and they're pulling up amazing copper oxide right at surface, and it's right in the biggest copper porphyry belt in Arizona. So that work takes a minimal cost. Doesn't cost a lot, but what it does is it brings projects to, if a major wants to come in, you drill here, 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 here. If it's not there, they can go to the next one, drill here, 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 go to the next one. And the time it takes to get projects to that level is significant. In people to do the mapping and do the targeting takes a lot of work, and to develop that portfolio takes time and effort, but it doesn't cost a lot. And these majors are looking for projects like that, and they just don't have the team to go out and do all the target generation.
Yeah, so maybe then to get a JV in there might make sense, obviously.
Yeah, we did this at Sable, right? Like we
Yeah.
did the big JV with South 32. So you can imagine it would look something similar to that.
Yeah. How much do you expect the mineral resource to change at DeLamar when you do this update?
It'll change pretty significantly. It's 50 to 60 million tons of mineralized material. It's exceeded our expectations. We're hitting the grade we expected. We're hitting the widths that we expected, in some cases better. So it's going to grow significantly in total. And then from a recoverable perspective, it's going to add those 3 to 4 years of heap leach. So, call it 3 to 500,000 ounces of recoverable ounces, which is fantastic.
Yeah, it is fantastic. And a lot of these milestones you have kind of scheduled for Q2, which we're in Q2. It ends.
June's going to be busy, Anthony. June's going to be busy.
It ends in basically a month and a half. What are your thoughts? I mean, we're going to see some news here in the next 45 days. Do you think that could be significant?
Yeah, we got about 9,000 meters of stockpile holes to be released. We got a resource to be released. We got a PEA to be released in the next couple of months here. It's 2
couple weeks.
Yeah. I know it's creeping up on us, isn't it? We're almost halfway through the year already. It's crazy. The drill plan for Wildcat and Mountainview. I know you said that obviously waiting for the permitting to go through, but do you have a drill plan yet, or are you going to cross that bridge when the permitting comes in?
Yeah, we have our first kind of phase of drilling plan for Wildcat. It'll be around 2,000 meters. Once we get the EPO, we'll announce a much bigger program.
Okay, great. And are you looking at any other opportunities to acquire assets?
We need to get our currency first.
Yeah.
So we need a significant re-rating before we look at everything else. That being said, we have a pulse on pretty much everything in the United States. And there's a lot of things that are stranded assets that are, $15 million companies that you could basically buy ounces for $5. It costs us $10 to drill them, but we can buy them for $5. So there's things like that we're always going to keep a pulse on, but Nothing in the immediate term.
Yeah, I mean, obviously you have a lot on your plate right now as it is. So, so you mentioned one of the analysts wrote something up about the recent merger and where the company is right now as the dust settles. Any other analysts come out with updated price targets or anything like that, or comments on the merger? Overall, has it been pretty positive?
Yeah, they're all updating their notes now, but yeah, we've seen three or four come out to date, and with updated targets. It's been incredibly well received. I mean, everyone wants to see more of this. As Jason said at the start, there's just so many of these companies that are all trying to push smaller assets, and so to see groups come together, be creative, like save the G&A costs, because now we're one big team, but we're now advancing 3 projects versus 2 teams advancing, disparate projects. So yeah, it's been really positive. We're starting to see some really nice target prices come out as these analysts start to look at the big picture here, which is, a massive resource with a clear path to permitting and lots of exploration.
Yeah. So, I mean, in terms of DeLamar, obviously, which is going to be the first on tap to go into production, are you thinking 2026 is the year?
Yeah, that's when we expect to get our record of decision, which is the permit. Yeah.
Yeah, that's great. I think we're going to leave it there for today. I want to thank Jason and Josh for coming on today and bringing us up to speed on the merger with Integra and what they have on tap for 2023. I think is really impressive. A lot of catalysts, and the stock down here at these levels, we think looks really attractive. And according to Jason, obviously insiders, like the stock down here and have been buying it. So they're really, like I said earlier, management is putting their money where their mouth is. Jason, before we wrap it up, you have any parting words for our guests?
No, I think thank you everyone for joining. If anyone wants to go into more detail, you can go onto the company's website. You can book a 10 or 15, 30 hour long meeting with us. So by all means, please go on the website and book a meeting if anyone wants more color on anything that we're doing.
Yeah. Anything from me, Josh?
No, again, thank you so much for taking the time. This is Jason and I's only second presentation together, so we appreciate you. As we stumble through a bit, as we learn how to present with each other. But no, this is a great opportunity, a great story. U.S. gold and silver production with a U.S. listing. They're pretty rare.
Yeah, it really is. And I think a Silver Wheaton investment is a feather in your cap and a pretty strong vote of confidence. So in the meantime, to point to what Jason said earlier before I wrap it up, management is very, they're transparent. They'll get on the phone with you. You can book meetings with them. So if you have any additional information or you want to have a chat with them, visit the website and do that. In the meantime, you can get additional information by visiting the company's website at integraresources.com, including company's current projects and details on the merger, and of course, being able to book a meeting with management.